So my next guest says mega cap tech stock is still driving earnings growth and can move higher. But gold investors need to stay alert. Let's go to Allan Small, Senior Investment Advisor, Allan Small Financial Group, IA Private Wealth. Thanks for joining us in-house today.
Thanks for having me.
Let's talk about what we're seeing in tech. It's enthusiasm, essentially, from what is an early agreement for China and the U.S. to say we're both going to back off a little and see what happens. Is this too much enthusiasm? What are you seeing happening here?
Well, it might be too much enthusiasm for one day, there's no doubt. But a lot of these tech stocks, especially the big cap tech names, at one point they were down about 30%, maybe even more if you look at an NVIDIA or an AMD. Some of the chip makers were down a lot more than that. But when you look at an Amazon down 30, a Meta down 30, Google actually, or Alphabet down even more than that, a lot of these tech stocks were taking it on the chin. A lot of it had to do with this trade war between the U.S. and China. And there are some other factors at play as well with respect to Google or Alphabet. Obviously, the breaking up of Google and the removal of the browser from the business and all that. So that was causing some issue there as well. But overall, I think, I guess preliminary talks or early stage talks between the U.S. and China, I guess getting rid of or reducing tariff rates significantly for the next 90 days shows that both countries are willing to negotiate and hopefully we'll come to some deal. That is good for tech in general, good for the chip makers, which have led this market and led tech for the last few years. And so we're seeing the results today.
But is it good enough for some of these tech companies to say, and some of them have already said, like, we're still going to spend, right? We're still going to put money in. We're still going to build because we need to do it. But some of them have been a little bit more hesitant and revised down. Is something like this enough for them to say, OK, we see some traction here. It's good enough for us to move forward?
We'll have to see what the trade deal looks like. So I guess my short answer is yes. I think a lot of these companies continue to spend on AI, infrastructure, data center. That's where the growth is. If you look at the S&P 500, all the companies that have reported earnings, obviously we haven't heard from NVIDIA yet. That'll come towards the end of this month. But the growth has been predominantly in the Mag 7. In the big cap tech names. That's what's driving the bus. That's what continues to drive the bus. I know a lot of people talk about equal weight S&P versus, the regular weight or the big tech names. Yes, equal weight has outperformed for a little bit, but make no mistake, growth and continued growth, and a lot of it still comes from the big cap tech names. So I guess an agreement with China or some sort of trade negotiations with China just makes things even better. I guess it takes off the worry of a recession, a slowdown, if you will. I think the Fed today, the chances of a rate cut now have gone down tremendously for June. They were well over 60%. Now I think they're under 50%. So when you take the odds of a recession off the table and you see tech earnings as strong as they have been, continue to be as strong as they have been, this is what we get, a big rally in the NASDAQ.
A lot of people, of course, fled tech because they saw things come crashing down. They didn't know how hard hit they would be by the tariffs, especially with Apple, for example, and corporations in China. So those people, do you feel like they've lost out, or do you feel like we've got that enthusiasm balloon that could come down a little bit, deflate a little bit, and they could pick up? Would you advise people pick up in tech at this point?
Well, I think overall, anyone who got out of this market, got out of tech or market in general, to get back into this market or tech, it's very difficult. Everybody can figure out when to sell, but when to buy back in, that is the difficulty. And so for now, when you look at some of these names that were down 30%, you look at a Meta today, for example, it's down less than 15%. It's already made back more than half of its losses that we saw just a few weeks ago. So getting back into these names now, you really have to be a lot more selective. A name like Microsoft, getting back to all-time highs or very close to it once again, multiples well above 30 times earnings on a forward basis now. So you can't just get into any tech name now. I think the time for doing that or kind of just picking any big cap tech name was probably a few weeks ago. Today, I think you have to be a lot more selective, but make no mistake about it. I still believe there's a lot of growth ahead. Keep in mind, another 15% just gets Meta back to where it was trading at its previous high. And I still believe a name like Meta can go a lot higher. A name like Google, Amazon, these names can go a lot higher. So yeah, if you got out, unfortunately, I think you should consider getting back in as soon as you can. And you want to be a little bit more selective right now. I think a couple of weeks ago, you could have been more broad-based, but now I think you really have to do your homework.
Okay. Are there you mentioned certain ones you think that will do well? Are there one or two you would steer people towards? We mentioned, for example, that In the U.S., Google has some cases that have gone against the brand, and they'll have to settle. But some of those things could take years, right?
It can. But when you look at a name like Alphabet or Google, you're looking at a name that's trading at like 16 times forward earnings, the cheapest out of the Mag 7 names. So you kind of have to take a look and say, all right, it may have a little bit more risk to it. But it's also trading a lot cheaper than some of the other names that are trading over 30 times or over 20 times. So how do you weigh that? Cheaper name, a little bit more risk. Are you willing to take the risk to get into a name that is as cheap as Google? I think you can. I think that the last results that we've seen from them, last quarterly results, show that their business is going strong, and that even though it has been reported lately that their search isn't doing as well as it was before, well, I still believe their search is doing well. And they have a lot of other businesses, a lot of other things that they could, levers to pull on. So a name like Google does make sense. But I think overall, when you look at tech, there's so many different parts of tech. But also you can look at other big cap names in the United States, in the S&P 500, other sectors, whether it's bank, whether it's a name like Caterpillar, United Rentals, any name that has fallen right now, those fallen angels. I think you want to take a look at, do some research, do some homework, see if they make sense, see what they're trading at, what earnings multiples are looking like for those names. And then I think you could take a position in some of these names, because I do think that if we can get some trade deals between China and the United States and other trade deals to come, definitely the word recession will be taken off the table. And I think this market will move higher. I
do want to get your outlook on pharma, because they took a hit. Earlier today, Donald Trump now saying he wants to bring pharmaceutical prices down in the U.S. It's not really clear how he's going to do it. He's going to leave it up to the drug companies at first to come up with a plan. Otherwise, he will come up with his own. So what's your outlook for pharma, given now that overhang?
Yeah, so pharma has been in tough for quite some time. And whether you look at a Pfizer or Bristol Myers or any of the names, any of the big cap names in pharma, I think the word the president used was equalization. So they want to just have U.S. citizens pay the same as they would pay in Europe. So whether you take down prices in the U.S. or increase prices, let's say, in Europe, he wants to see an equalization there. So I think there's some wiggle room there. Also, the middlemen, which is what, the pharmacy benefits managers, they come in and they set the pricing. I think the president's really going after them and trying to get them or force them to come up with obviously cheaper pricing. So there's a lot to play there. I think initially it looked like it was a bad day for pharma because of that announcement. But then if you look, a lot of the pharma names ended up significantly higher, because I don't think it was as bad as initially thought. So I think you can buy a gain selectively in the pharma space. But look at the names that were struggling before this announcement. I think those are the names you want to avoid. Perhaps there's some other names that are cheap right now, but cheap not for a good reason. And I think those are the names, especially if you can pay a dividend, those are the names I think you want to go into.
What's your take then on gold, which was seeing such incredible highs over the last sort of month or so? And now that things have sort of come back on the other side, what's your take on whether we'll see gold continue to climb, or has it come to where it's going to be?
Yeah, I think gold, if you were moving into gold in the last few days, I think you're getting in at a high point. Obviously, when there's chaos and uncertainty in the world, gold can continue to go higher. But if we do see trade deals, we're going to see the dollar start to rise. We saw the U.S. dollar rise significantly today against our currency, for example. Not good for gold. And so I think you have to, if you're going to own gold and continue to own gold stock or certificates, I think you have to be nimble. You have to be ready to react, perhaps ready to sell, because there are many days, I think, ahead where we could see gold like we saw today with significant sell-offs if we continue to hear good news out of the Trump administration and the U.S. economy.
All right, Allan, I got to leave it there with you. Allan Small is Senior Investment Advisor at Allan Small Financial Group, IA Private Wealth. Thanks for coming in.
Thank you.
When we come